Good morning, student. As you know, I have solved question number up to 12 in my previous video. So today I will solve question number 13 of depreciation chapter, and let us start the question. Ajanta Industries purchased a machinery for rupees 1,20,000 on 1st August 2017. It was decided to depreciate it at the rate of 10% per annum on retained on value method. On 1st July 2019, 1/4 of the machinery was damaged and could realize only rupees 10,000. On the same date, a new machinery was purchased for 50,000. So machinery account from 2017-18 to 19-20. Assuming that books of account were closed on 31st March each year. So student, let us start the solution. This is the format of plant account and machinery account. So I will write machinery account. And this is our question number 13, DR side and CR side. Now this is a column of date, particulars, rupees, date, particulars and rupees. Student, in this question 1/4 of the machine was damaged and sold. So in the very beginning, when we have purchased on 1st August 2017, I have to divide this machine in two parts. That means one part will be 1/4 and another part will be 3/4, because 1/4 of machinery was damaged. Now on 2017, 1st August, to bank account we will write first part 1/4, it will be 30,000, and second part will be 90,000. That means 3/4 of 1,20,000. Now we will see our calculation will be easy in next year, and I will write 1,20,000. Now we have to depreciate it. So depreciation will be on 2018 31st March, M for March. By depreciation on first part of machine will be from 1st August to 31st March. So when we will calculate month, It will be August, September, October, November, December, January, February, March, and it will be 8 months. So first we will calculate depreciation on 30,000 at the rate of 10% per annum, as question is saying, for 8 months. So it will be 2,000, and you can calculate it will be 2,000. And now on second part of machine, it will be triple. Depreciation will be triple because cost is triple. So depreciation we can calculate easily 6,000. So total depreciation will be 8,000. Now we will balance it. So by balance CD will be of first part 30,000 minus 2,000, it will remain 28,000, and on second part 90,000 minus 6,000, so it will remain 84,000. Now student, total remaining value will be 1,12,000, and both sides will be 1,20,000 by adding this. Now balance CD will transfer to next year. So I will transfer this balance to next year. So we will write to balance BD. First part 28,000 and second part will be 84,000, and total will be 1,12,000 on 2018 April 1st. Now in 2019 31st March, again we will calculate depreciation. So it will be on first part depreciation will be 10% of 28,000, and it will be 2,800, and on second part 10% of 84,000, so it will be 8,400, and total will be 11,200. Now by balance CD will be on first part 28,000 minus 2,800, and remaining balance will be 25,200, and on second part 84,000 minus 8,400, so it will remain 75,600, and both total will be 1,08,000, and I will add both sides. Now it will be 1,12,000, both sides 1,12,000. Now student, it will transferred into third year. So let us transfer it into third year. In 2019 April first to balance BD on first part 25,200 and on second part 75,600. It will be 1,08,000. Now in this year question is saying that on 1st July 2019 1/4 of machinery was damaged and could realize only 10,000, and same date a new machinery was purchased for 50,000. So I will write July 1st to balance to bank account 50,000 for new machine, purchasing for new machine. Now student, you can see I am going to step by step and there will no problem in solving this question. On 2019 July 1st, first part, it means 1/4 of machine damage, and I have separate already 1/4 of machine and depreciation also charged separately. So I will calculate depreciation on first part only for 3 months because April to July. So by depreciation will be 10%, 2,520 for 1 year, and we have to calculate depreciation for 3 months. So it will be 630 because 3 months is the 1/4 of year. Therefore we have calculated 1/4 of 2,520 because depreciation will be 2,520 on first part at the rate of 10%. So, and it has been sold in 10,000, so I will write bank account 10,000 rupees. So you can see when we deduct 10,630 from 25,200, then it will become our loss. I again repeat, when we deduct 10,630 from 25,200, then our loss will be 14,570. So I will write PL account loss on July 1st. And now student, we will calculate depreciation on 2020 31st March on remaining machine by depreciation of first machine second part. So it will be 7,560, as you can see. 10% of 75,600 will be 7,560. So I will write 7,560, and On second machine, it will be third machine, suppose. On 50,000, 10% for July to 31st March, it will be 37,050. 3750 you can calculate. So total will be 11,310. And now we have to not calculate separate balance because this is the last year of this question. So I will add directly 1,50,800 will be both side. 1,50,800 will be both side, and when we will deduct these four items from 1,50,800, the balance of machine will be 1,14,290 by balance CD on 31st March, and I will transfer it to next year on 2020 April 1st to balance BD and 1,14,290. Now student, we have to go in next topic of this chapter based on provision for depreciation account, original cost method. So first we will understand what is provision for depreciation account, how it will prepare. So I hope that this question was understood by you, and if any problem then you may call me. So let us some discussion about provision for depreciation account. Now student, we will study about provision for depreciation account in our next video. But what is provision for depreciation account? We have to understand this term. In this method, depreciation is not directly deducted from the assets account. For example, you can see that I have deducted directly depreciation in assets account. Yes, this is our assets account. Machine is our assets. So student, in this method we will not deduct directly the depreciation from assets account. The amount of depreciation on asset is provided for the period by debiting the depreciation account and by crediting the provision for depreciation account. It means depreciation account debit and provision for journal entry will be depreciation account debit to provision for depreciation account will be credit. Journal entry will be. Now student, accumulated depreciation account. This is the name of provision for depreciation account. We can also say accumulated depreciation account to provision for depreciation account. It is shown on the liability side of balance sheet. Yes, provision for depreciation account is shown the liability side of balance sheet. There are two sides of balance sheet. First is liability side and second is asset side. So we will show liability side to provision for depreciation account. Thus, assets account is always shown in the balance sheet on the asset side at its original cost. And we all know in asset side we will show all the assets of business. So student, now I will meet you in next video. Thank you very much.